Greetings, friends. My name is Adam Stein. I am the broker and co-owner of Stein, Posner Real Estate here in Boca Raton, Florida. Today, I wanted to share with you some information that I think may be really helpful for you in terms of where we're at in the marketplace. A lot of friends and colleagues, past clients, my agents are asking me, Adam, what's going on in the market? Typically, my first response to that is, depending on who you are, is, well, why is that relevant for you? Right? Are you thinking about selling? Are you considering buying? Then I would get more into the data. So I just want to share with you, and I'm not going to do a big data dump here for you. If you want to subscribe to our newsletter, or if you want to check out our blog on the Stein Posner website, we share on a monthly basis all of the statistical data from the Florida Association of Realtors. But on a macro level, let's get into it. So number one, know that I am not an economist. I am not a prognosticator. I do not have a crystal ball here on my desk. But what is important is to understand that it's about November 2018. And we are really at the end of what I think is a very long run in home appreciation. Let's dial back a little bit. 2005, 6, 7, we saw massive appreciation kind of hit the top. And then we had a recession, 2008, 2009, 2010, that was rough, right? And so what's occurred really since that time is interest rates were very, very low. We have seen an increase in interest rates over about the last 12 to 18 months of about 150 to 200 basis points, or 1.5% to 2%. And so what's occurred is during that time, we've also seen values really escalate at a tremendous rate, in excess in some cases of 8 to 10% per year. The challenge with that over the long term, and real estate is a cyclical business, we've found that typical real estate cycles are going to last about 7 plus or minus years, okay? But what we're experiencing is a longer cycle where we've had more appreciation during that time period. And really what I'm experiencing, what we're seeing at the transactional level, is things starting to level off and normalize. So here's what that means. We're not going to see 8 to 10% appreciation. Now again, I'm not a forecaster, I'm not an economist, I'm not a prognosticator, but I do my homework. And I study the market, and I can see on the ground level what we're experiencing for our clients, for our sellers who are listed, who are not able to sell their homes as quickly as they once were able to because the market was kind of catching up to their price point. We're seeing buyers have more options and more choices because the sellers on the supply side are having to be more realistic. They're having to recognize and understand that they can't just price their home at some high value and expect to get it because the market is going to catch up to them, which is what's been happening. So here's what I think is going to occur, and it depends on which side of the equation you're on. If you're a seller and you've got a life event, because that's what we deal in, generally speaking, people sell or buy real estate because they've got something going on in their life that is requiring them to do so. A new job, lost a job, growing family, empty nester, whatever the case may be. If you're a seller and it's time for you to sell your house, the reality is that you're still going to be able to capture a great price. The marketplace has stayed very strong. We haven't necessarily seen a lot of pullback, but it also depends on your slice of the price point pie, okay? Entry-level price points here in Palm Beach and Broward counties in South Florida, which is the main area that we cover. We do some business in Dade County and Martin County, but really in those two counties, that entry-level price point under $400,000 or so, still very competitive, lots of buyers, lots of demand. Between what I call now the move-up price point, between, let's call it $450 to about $650, $700, we're seeing stability. We're seeing an equal amount of supply and demand. If you're overpriced, you're overpriced. You're not going to capture an overpriced value. Buyers have more choices. Let's also understand that as interest rates have gone up, okay, a buyer's affordability factor has come down. With every interest rate increase, what that buyer could afford at one time has now come down because their economic ratios and what they can afford on a monthly basis has now come down because they've got to factor in the cost of the money. If you're in that sub-luxury price point, which I'm going to call, let's say 800 to 1.1 million, for example, and this is very local to South Florida, okay? I'm speaking to you, South Florida. What we're seeing is price compression. We're seeing more supply and less demand. We're seeing less buyers being willing to go into that market right now because they're waiting to see what happens on the price points. Then we move into the luxury slice, which we'll call 1.2 and up. And those buyers tend to have a different buying appetite. They tend to have different economics at play for their lives that are going to be relevant for their buying or selling decisions. The reality is, I think we're moving into a stable market. I think we're going to continue to see jobs stay very stable. Let's recognize that unemployment is at a historically very low rate right now in the U.S. economy and here in Florida. Interest rates, I mean, when I bought my first house 15 plus years ago, my interest rate was 10%. Today, you can get a loan still at 5.25%, 5.5%, depending on your credit. Still very, very low relative to the historic trends of interest rate and borrowing. So again, what I'm going to say to you is when you want to ask me or any of our professionals a question about what's going on the market, of course, reach out to us. If you want to reach me by email, it's adam@steinposner.com. You can text me, call the office here. You can find us on social and, of course, online. But my response to you is going to be, why is it important to you? What's going on with you in the marketplace today that's going to be relevant? Appreciate your time today. Hope this was valuable content. Thanks so much.